So I've taken a short on pound dollar after price closed above or took out, it's taken out liquidity off these highs during the pound dollar CPI news, which is also inside that 60-minute fair value gap. The way price approached that level was this strong bullish momentum candle, and tapped into at least this fair value gap and is finding some kind of a resistance. Was enough for me to start looking for opportunities to go short, and essentially I saw price starting to move lower, and I've essentially placed my entry just above the 50% of that 60-minute fair value gap. I've given myself some breathing room for stops, and I do anticipate price to come down to these lows, but first I'll be watching this low to take target ones, or even just move my stops to break even and then let the rest of the trade play out. Alternatively, if we are going to push higher, we also got this bearish fair value gap on the 240. So if I am proven wrong on that trade, I will see how price plays out later on, and I will look for other opportunities to go short, because ultimately I am anticipating price to go bullish during the order flow is all bullish for me. My direct bias is bullish, so I'm anticipating price to push lower before that. And before it pushes lower in that direction, it normally comes up aggressively into a higher time from POI, like it did during CPI, and around that time is when it finds resistance. Ideally, I was watching this, wanted to take a trade here, but I wanted a bit more confirmation, and this provided me with more confirmation. That one was definitely an early entry. I didn't really notice this 240 fair value gap before entering the trade, because I saw price coming into the 60-minute fair value gap and taking out liquidity off this high one more time. It looks like a good trade, but now looking at it in hindsight, we had this 240 fair value gap deeper in discount in comparison to where this liquidity was in the 60-minute fair value gap. So we might come out and take out, this 50%. Maybe we'll tap into the 50% of that range, and then we'll find resistance. So yeah, I probably will get stopped out on this, but I will also look for another trading opportunity as price reaches on these highs. Yeah, this is mainly because I entered quite early on the trade. So I've been stopped out on that initial trade, and I've entered another trade as price has gone through this 240 fair value gap around these highs. I've got my stops at 1.204, 3204, and even if I'm aiming for these lows as target ones, I can aim for target twos down to these lows from CPI. So let's see how this one plays out now. Looking at it from a higher time frame perspective, maybe we've already pulled deep into the range for pound dollar, because unlike euro dollar, which has not pulled deep into a discount of this range, pound dollar already has. Right, let's just look at this. It came down and found support at this fair value gap on the 240 time frame, held that 50% off the second fair value gap in this series of 3 fair value gaps, which is for me a good point of interest, better than the first one. Ideally in the 3 candlestick fair value gaps, especially on 240, I don't really want to look for entries on the first one. Ideally I want to look at it on the second's 50 or even the third start, and then it found support. Since then we have failed to make a retest, which if we look at euro dollar took out liquidity, right, whereas pound dollar didn't. We can see liquidity being taken out on euro dollar, and pound dollar not yet, and then we've started to displace again higher. I do think price can, even if it is going to continue going bullish before coming back down, it will most likely come into at least the 50% of this range, pull back into the 618 at least. Because of that, I'm quite confident with the trade I've taken, the second trade I've taken, especially because I will be taking target ones below this channel where there's liquidity resting. So yeah, I'm a lot happier with my second trade than I was with my first trade. That retracement 50% lines up actually at the start of this first swing low, and then 61.8 is below this, so maybe I will be watching how price comes down to that 50% first. I took another short as price approached this order block on the 16-minute time frame, which is deep in this discount. I'm still predicting price to come down below these lows from yesterday before finding support and pushing up to the buy side liquidity. But after seeing the way price has been moving, I entered because of the fact that we had SMT with EU just before the close, and we put in this strong bullish move after this pause, and then I exited the trade as I saw that price held this order block and started to move up, and I took a 0.5% loss. And now I'm just seeing price continue up. Maybe we'll take out the buy side liquidity first and find some resistance before the FOMC. And yeah, I'm just going to wait until that buy side liquidity is taken out to look for any trading opportunities now. And that's a 2.5% loss today, so I don't really want to be trading anymore. This is where we're at with pound dollar. The price on Thursday evening, so 3 p.m. US time, 8 o'clock UK time. I took 3 losses in a row. Luckily, I got out at 0.5% because the order flow was way too bullish by this point. I didn't anticipate a pullback down below these lows and then push back up. Yeah, that was one of the biggest L's in a day I've taken, because I was so fixated on the fact that price was definitely going to come down to these lows somewhere around here before pushing up and then finding, before FOMC. So what did price do? Didn't do that. It pushed up to these highs, pulled down, pushed up during FOMC, and then cascaded down to these low, which it did come down to during when I was in bed, Asian session, the blues Asian session, by the way, and then eventually pushed up, and then it pulled back in to provide some entry, but buy side liquidity was already taken from me, so I didn't look at this trade. I got into the EU trade after. But yeah, these 3 L's, I just need to review the fuck out of these, because it's something I absolutely have to avoid in the future. So I've been bullish going into the week. I've been anticipating or predicting price to take out these highs, these buy side liquidity to start off with. And because it was a Wednesday and Monday we moved up so sharply, Tuesday we got this small bearish candle. I was predicting price will come below the low of Tuesday on Wednesday and then find support and then push up, because that's the trade play, right, that you normally look for. Because of that, I was really fixated on the fact that we will take out Tuesday's low. Well, guess what, motherfucker? It doesn't always have to take out those Tuesday's lows, especially the fact that we've been displacing up, right? Such a strong bullish displacement. We had a swing low right there, manipulation going on. We had this strong fair value gaps. I normally look for the second fair value gaps 50% to be held if there's like series of fair value gaps in a row. This also lines up with the fact that it rejected this resistance, order block, whatever you want to call it, rejected these highs and then put in on the 1 hour time frame clearer, right? Failed to close below, and then during entry it pushes up. I mean, it's good. I like the thought process behind entry, because price came up to APOI with a sharp move, which is something I normally look for anyway for an entry, but not when the order flow is so bullish. And also given the fact that we had this another bearish fair value gap on the 240 right there, which would have been in discount. If I'm going to take those aggressive trades, then it should be in that range rather than in that this range, because of the fact that we've already rejected a PDOA, a bullish PDOA in a bullish order flow. So technically, yeah, price could take out Tuesday's low, but there is also a probability that it won't. And trying to trade that to down there, especially when we rejected such levels, it's not ideal, and it's not something that I should be entertaining. The second trade I took it before I even reached that 50% off, this range. I actually took it when we reached that 50%. Again, not a great deal, not a great trade. We have liquidity that price can come into, but again, strong order flow. But this is probably better trade than the first one. Ideally, this one is something I would actually trade would be acceptable for me, and taking a loss on that is not something I would mind, because at least it came into the 240 fair value gap. We did come into that 50% off that range as well, but that came afterwards, and then we just continued higher. The third trade, again, not a really good trade, mainly because price closed above this bullish fair value gap, a bearish fair value gap, after obviously been holding these fair value gaps in a bullish order flow. And the fact that we closed above this strong bearish fair value gap just indicates to me that, you know, we are just going to be bullish. And I believe my prediction would have been going into this trade is, we'll pull back into this before pushing up. However, that doesn't need to happen. It can easily just continue higher before pulling back into that zone. And that's what price starts to do, and then I get out of that trade straight away with 0.5% risk, because there's no way I wanted to continue being in a trade. And then after that, I stopped trading for the day. Price eventually comes up and then finds some resistance at 6 a.m. I know this is outside trading hours, but this is the prime time for price to manipulate before continuing in its direction. So this right here would have been a very good trade, especially because I know this will, well, not this will, normally this SMT is with EU as well. So right here we have on Wednesday, right, we had this higher been made for GU, and then this high, and we had another high, no SMT on GU EU this time around. But normally at this time before New York opens, there's some manipulation going on. Or manipulation happens during New York Open. So these are the times when, especially if we've reached a certain PDRA, right, or in Euro dollar we've reached that rejection block or that structure start on the daily time frame, on the 1 hour time frame, and we found starting to consolidate sideways, and that would have been a good trade to go short finally. And then we continue lower and then continue higher during London. And the days just went by because FOMC later on, there was no way I wanted to trade anymore. Could have entered trades at these highs, at those buy side liquidity. We took out a weekly time frame buy side liquidity, tapped into a monthly time frame order block as well, I believe. Yep, right there. And on the, I believe, 5 minute, there was a good entry. But at this point, I wasn't watching the market. I'd already taken too many losses, and there was no way I wanted to take a trade. And I believe this was the entry I was looking at, and then the targets. Anyway, 1 to 1, 1 to 2. The low of this breaker block. And yeah, that's my review for these trades. I think I'll just step outside for FOMC next time, and also try not to, you know, trade against the trend even on the lower time frames, especially when order flow is so bullish. Like, it's not worth it, because I know I've taken the same trades, similar trades last week, I believe, or the week before, and I took 2 losses in a row on pound dollar, and then the third one was a winner that ultimately made it a break even play. But sometimes it won't work out, and that would have turned into 3 losses in a day, and that's way too much for me to handle. Psychology wise, those 2 trades really made me question a lot of things, made me doubt myself a lot more, made me realize I've got a lot of work to do. And it did send me down a spiral yesterday and the next day. And luckily next day I was quite mindful of my actions, and I wanted to make sure I wasn't taking any aggressive trades. So I waited until there was a really good opportunity, which after taking and after that, you know, going into profit, has given me some reassurance. But after those 2.5% risk, I did start to look around to see what I could do, and, you know, revenge trade essentially. And then I saw this Aussie dollar price displaced. We had room to go lower for me anyway at that time, and then price pulled back, was holding this, and then I shorted around here, and then I think I got out. You know, I entered the trade and then I got out entered with like 0.2% risk, not much risk at all, and then I exited straight away in a small profit. So because that was obviously just a aggressive revenge trade, and I realized that afterwards, and that I needed to exit that trade. So yeah, taking those losses, multiple losses in a day, can be, you know, detrimental if you're not confident, or if I'm not confident with my approach to the market. So I have to be sure with the trades that I'm taking, ideally in the order flow, in direction with the order flow, and ideally after the price has taken out highs and lows, not in the middle of not shorting in the middle of a range when the order flow is so bullish, so bullish. So that's essentially the London pre-London Open session. So just essentially London Open, where price goes down and finds support at a higher time frame PDRA, and then finds support at that level to go up in a bullish order flow. I'm essentially shorting that London Open manipulation, which doesn't happen all the time. I know that from taking a few losses last week or the week before, and again this week. So that's something, although last week I believe I made some profitable trades with exactly the same kind of approach, it's not exactly the approach that I want to be taking all the time.